Let's get you updated on our grain trade. I'm Marlon Bowling, your tour guide to the ag commodities. Now, this morning, we had some weekly export sales numbers that USDA released, and we can take a quick peek at those numbers. The corn, well, it was under 1 million tons this week. It was 890,400 tons. It was okay. It wasn't anything to write home about. Soybeans were 1.18 million tons, a pretty good number, but it was actually below the range of estimates. And the wheat came in at 269,300 tons. There again, it was within the range of estimates, but it was in the lower half of the range. Well, like we saw yesterday, if you were with us then, you will remember that we opened up pretty flat on the day and then rallied as we got into mid-session. Well, let's look at what we're doing now. We're doing similar action today. We had the corn basically about a penny higher maybe this morning. And we have December corn now 7.5 higher at 5.64 3/4. You know, there for a little bit it was up 11 cents. Now we have the March corn currently 7.5 higher, now 7 3/4 higher at 5.73 3/4. So it's hanging right in there with some pretty decent gains, and the best gains are on the nearby contracts. On the soybean trade, these quotes provided by bar chart show November now at 12.43. That would be 3 3/4 cents higher. We're still about 6.5 cents away from our high. And January now 4.5 higher at 12.54 1/4. The wheat market has been surging ahead here this morning. In Chicago, well, check this out. 13.5 higher on December at 7.73 1/4 per bushel. And even that is 7 cents from our high of the day. So at one point we were about 20 higher there. July is up 9 cents. Kansas City wheat, December 7.5 higher at 7.90 1/4. July new crop is 6 3/4 higher now. In Minneapolis, you have that December contract quoted 16 3/4 higher at 10.38 3/4, and July is up 12 cents on the day. Cotton market has some big gains today. December up 162 points at 112.14 cents per pound. And we've been watching, of course, the oats market of all things this past couple of weeks. December oats are up 5 3/4 at 7.16 3/4. Let's go to Ted Seifried of Zaner Ag Hedge in Chicago. Ted, kind of a mirror image of what we saw yesterday. What leads to the strength after we get open?
Yeah, there's a lot of things going on right now. And certainly, we're hearing better than expected yields for soybeans, good yields for corn. So a lot of people want to be negative on these markets right now. However, as we've been talking about for months, I kind of felt like once we got past 40-50% harvested and we got past that initial harvest pressure and cash sales started to dry up, we were going to see the cash market try to push these things higher into the end of the calendar year. And I don't see why we really should change that idea. I mean, we're in an inflationary situation, not just domestically, but globally. Domestic demand for corn and soybeans is really very good. I mean, you look at ethanol, the grind has been really very strong. Profit margins are good. That looks like it's going to continue despite our concerns about the EPA lowering mandates. Crush margins for soybeans domestically are really quite good. They're a lot better in China than they had been. The hog herd in China is doing better. So there's just this demand out there. We know that supply might be a little bit bigger than what the USDA said. So how we balance that out is going to be a big question, but that's more of a question for what happens after December once we know that South American crop looks good. So yeah, for right now, we've got weather happening at the moment, harvest delays, that's tightening the cash market even further. So, right now it just seems like the path of least resistance is to the upside, and we keep getting these sort of updrafts. So we'll see if it continues on through the end of the calendar year like I was hoping. It's been a little bit faster and more aggressive than I thought it would be at this time. So I am starting to make some sales a little bit more aggressively on old crop, but also really looking at new crop, specifically soybeans. But it's been a nice couple of days here, Mark. Okay.
Well, the dollar index, I just wanted to point out, is a little weaker right now, and December futures on the U.S. dollar index are at 93.410. That is down 388 points as we speak. Keep an eye on that as well. All right, we'll come back and talk more with Ted Seifried about our livestock trade right after this. Let's look at live cattle, and on the big board right now, let's see if they're higher or lower with the surge in the grains. Well, we're a little lower. December live cattle 57 lower now at 131 even per hundredweight. Meanwhile, on the feeder cattle market, you have November currently 60 lower at 157.87 now, and January down $1.05 at 157.90. That would be the steepest loss of all the feeder contracts here. Now on the lean hogs, big gains on the nearby contracts. December is now up $1.47. We're trading at 73.45, and even that would be about 70 cents from its earlier high today. So pretty sizable gains in the hogs. It looks like maybe they have finally got some footing here, Ted.
Maybe, Marlon, maybe. Although I hesitate to say that right now until we get closer to the end of the day. But we really need to see these hogs put in a little bit of a floor here. We do have, technically speaking, potential for a bit of a double bottom or a test of the bottom end of the range that we've defined here in the last couple of months. So, yes, I'm hoping for upside potential. You know, the cash market is trading at a pretty wild premium to where the futures are. I think there's a lot of fundamental reasons why we should hold these lows and bounce back up towards the 80 level, or maybe even get into the low 90s like we were in the October contract. But it just doesn't seem to happen. So I want this market to prove to me that it's able to hold on to strength on days like today. And once that happens, then we can start getting a little bit more excited about the low being in for hogs.
Okay.
But I'm a little skeptical at the moment.
Not totally a believer just yet. All right. Well, thank you, Ted, for weighing in on the markets with us. Always a treat to talk with you. Ted Seifried of Zaner Ag Hedge. He's located in Chicago. It's all yours, Tammy.